Coming up on Market to Market. By choosing not to rule, the Supreme Court paves the way for increased blends of ethanol.
The bill as amended is passed.
The Senate approves a measure creating a path to citizenship for 11 million undocumented immigrants. And the Agriculture Department's latest stocks and acreage reports move the markets. Those stories and market analysis with Jamie Kawaki next.
Funding for Market to Market is provided by DuPont Pioneer, working with growers to match the right product to the right acre. Science with service, delivering success. This is the Friday, June 28 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Continued recovery in the housing sector and an improving labor market pushed consumer sentiment this month to a 5-year high. According to the Commerce Department, sales of new homes rose in May at their fastest pace in 5 years. The median home price of a new home sold last month was nearly $264,000, up 3.3% from a year ago. U.S. employers added a respectable 175,000 jobs last month, while the national unemployment rate has fallen 0.6% in the past year. And the Conference Board, a private research group, reports its Consumer Confidence Index soared to 81.4 in June, in its best showing since January of 2008. Businesses monitor consumer confidence closely because consumer spending accounts for nearly 70% of U.S. economic activity. But confidence also plays a pivotal role in product development. And in a case pitting renewable fuels producers against big oil, the highest court in the land paved the way this week for increased blends of ethanol. The Supreme Court refused to consider a challenge by the American Petroleum Institute that would have blocked sales of E15, a blend of gasoline that is 15% ethanol.
Well, we were disappointed by that decision. I mean, we're in a position where we can't even argue the merits of this premature decision. So we are assessing our legal options right now and determining what our next steps will be.
By rejecting the case, the High Court essentially upheld a lower court ruling allowing the increased blend. This week's action was just the latest fight in a long-running battle over the Renewable Fuel Standard, or RFS.
This is a real clear battle for the barrel. Okay, the oil companies want you to buy petroleum. We want consumers to have the choice of higher blends. No one is requiring you to buy E15. No one's requiring you to buy even higher blends like E85. But we think it's good for consumers to have those options.
Approved by Congress in 2005, the RFS requires that the amount of ethanol blended with gasoline increase each year. Its goal is to reduce the nation's reliance on fossil fuels and decrease greenhouse gas emissions. Supporters of the Renewable Fuel Standard claim the law has created more than 400,000 jobs and has played an important role in revitalizing rural communities. Proponents also say blended fuels have helped to reduce the U.S. dependence on foreign oil by more than 30% and have benefited the environment by reducing carbon emissions.
Big oil cannot compete with ethanol blends on either price or performance. So, they're not scared that you're going to put E15 in your car and your car's not going to work. They're scared to death that you'll find out that you can put E15 in your car and it will work just fine, because they cannot compete on price and performance.
The Renewable Fuel Standard sets a 16.5 billion gallon production requirement for ethanol and other fuel alternatives this year, up more than 1 billion gallons from last year. By 2022, the law requires an increase to 36 billion gallons, more than double this year's production. Opponents, however, say the RFS mandate puts politics ahead of science.
Well, because the EPA made this decision prematurely. We've had additional research come out that shows that millions of vehicles in this country that are on the road today are at risk for engine damage and fuel pump damage if they use E15.
Ethanol supporters say E15 is cheaper than conventional gasoline and offers similar gas mileage as E10. And after years of delays, the Supreme Court's decision this week will allow consumers to make their own decisions at the pump. The House's stunning rejection of the Farm Bill last week is already prompting calls for a significant shift in the way Congress crafts agricultural policy. For decades, lawmakers on agriculture committees have included nutritional programs in farm bills to garner urban votes. But this time, strident opposition to deep cuts in nutritional spending doomed the legislation. House Majority Leader Eric Cantor called on lawmakers this week to split farm and nutritional programs into separate bills. House Speaker John Boehner says he's open to the split and will make a final decision after lawmakers return from the Independence Day recess. But the big development on Capitol Hill this week took place in the Senate, where lawmakers finally approved an overhaul of America's fractured immigration policy.
The yeas on this bill are 68, the nays are 32. The bill as amended is passed.
The United States Senate passed one of the most sweeping reforms of immigration in years Thursday. Senate lawmakers have been working on the legislation for years. Most recently, a bipartisan group, the Gang of Eight, led the discussions.
I want to thank all my colleagues, the Gang of Eight, our great Judiciary Committee that debated and marked up this bill into the night, day after day. We should be proud of this bill, and I ask my colleagues to support it.
I stand here today strongly in support of immigration reform. But this bill is not immigration reform. It is big government dysfunction. And that is why I cannot support it and urge my colleagues to vote against it.
Essentially, the bill aims to restrict future illegal immigration while at the same time offering a path to citizenship for the 11 million immigrants currently living in the country unlawfully. The measure calls for 20,000 new Border Patrol agents, 700 miles of new fencing, and for the implementation of high-tech devices to be deployed to secure the border with Mexico.
Isn't it in us to bring 11 million people out of the shadows that are now being exploited and have none of the protections of citizenship? Well, how do we address some of these? This legislation does secure the border, and I can tell you from 30 years of being on the border, this bill secures the border, and anyone who says it doesn't does not understand.
Rather than working with law enforcement groups and prosecutors and considering the needs of everyday citizens, the sponsors of this bill have spent months in negotiation with special interests and lobbyists to produce a bill that will not work. That's the problem we have before us today, that will create even more lawlessness in the future.
And I believe a vast majority of Americans who want immigration reform to pass will thank them for doing the right thing. I hope that they will have the political will and courage to unite the nation and send this bill to the president's desk. A bill that will increase the gross domestic product, reduce the deficit, promote prosperity, and create jobs.
Ted Kennedy said it best. From Jamestown to the Pilgrims to the Irish to today's workers, people have come to this country in search of opportunity. They've sought nothing more than a chance to work hard and bring a better life to themselves and their families. They came to our country with their hearts and minds full of hope.
Opponents cited ideology and budget busting as reasons to vote against the measure. But in the end, the bill passed 68-32, with several Republicans crossing over with the majority to ensure passage. But the measure faces an uncertain future in the House, where conservatives oppose the path to citizenship that's at the heart of the Senate bill. Other House lawmakers prefer piecemeal legislation over the sweeping reform employed by the Senate.
Next, the Market-to-Market Report.
There's an old adage in rural America that says rain makes grain. If that's the case, this season could be one for the record books. Those calling for bumper crops also cite increased acreage as a factor pointing to bin-busting production. The Agriculture Department released a few guesstimates of its own Friday in its annual acreage survey and quarterly stocks report. While record acreage and harvest numbers are predicted this season, storage bins are as empty as they've been in many years. USDA's quarterly stocks report for June reveals corn supplies at a thin 2.76 billion bushels, down a mammoth 65% from March, but only 12% lower than this time a year ago. Soybean stockpiles also remain tight, with an estimated 435 million bushels remaining in the bin. That's down a whopping 78% from the March report, and it's 35% lower than a year ago. And wheat stocks have fallen as well to 718 million bushels, declining more than 50% from last quarter and remaining almost 3% lower than last June's quarterly stocks report. Turning to the new crop, USDA's annual acreage survey indicates corn planting is up slightly over the last year at 97.4 million acres. According to federal officials, that's the most corn acreage planted in the United States since 1936. Currently, 96% has emerged, and more than half of the corn is in good to excellent condition. If the weather stays favorable, USDA officials continue to predict a record harvest of just over 14 billion bushels. The survey estimates U.S. soybean acreage at a record 77.7 million acres, up 1% from last year. Government analysts predict a record-breaking harvest of 3.39 billion bushels. Excluding the small amount of acres yet to be planted, 92% of the crop is in the early stages of development, and 65% is rated in the good to excellent range. Wheat acreage is estimated at 56.5 million acres, up 1% from last year. USDA prognosticators have already predicted the wheat harvest will be 200 million bushels lower than last year at just over 2 billion bushels. And for the third consecutive year, cotton planting is expected to be reduced to just over 10 million acres, down 17% from last year. If the weather holds, 13.5 billion bales are expected to be harvested this year, more than 20% fewer than last season. USDA's annual acreage and quarterly stocks reports pressured grain prices Friday, compounding losses in earlier sessions. For the week, September wheat lost 47 cents, while the September corn contract moved 45 cents lower. Old crop soybean prices, however, rallied, with the August contract gaining 17 cents. Nearby meal prices followed suit with a gain of $15.30 per ton. In the softs, cotton had another losing week, as the December contract posted a weekly loss of 63 cents per hundredweight. In the dairy market, July Class 3 milk lost nearly $1, while the August contract moved 70 cents lower. Over in livestock, the August cattle contract gained 42 cents, nearby feeders advanced by $2.50, and the July lean hog contract posted a weekly gain of $1.52. In the financials, the euro lost 123 basis points against the dollar, crude oil advanced by $2.87 per barrel, COMEX gold lost nearly $70 per ounce, and the Goldman Sachs Commodity Index moved fractionally higher to settle at 610.80. Here now to lend us his insight on these and other trends is one of our regular market analysts, Jamie Kowalki. Jamie, welcome back.
Thanks, Mike.
We've got a lot to talk about today. There's been a lot of chatter both in the ag markets and in the broader markets, and I think we'll take a look at the broader markets first. As we look at the continued sell-off in gold, give us your thoughts there. What should we be anticipating in the gold market?
You're exactly right. It's been a wild ride. $40 moves seem to be the norm the last week and a half. We did see a little bit of short covering midday today, closed the week off pretty decent, but it was mostly end of the month, end of the quarter, short covering, get me out type trade. I think the market's completely overdone. I think you bounce the August up to $1,300 and take some profits there if you're trying to pick a bottom. But it's a wild market. I would use stops and be careful. There's still all this uncertain area out there about QE3, tapering. You know, are we going to scale back around Christmas time? Is it after that? And just still has these outside markets shook up. Bonds are another example as well, just been all over the place.
What's the best way for people out there to negotiate in this era of uncertainty?
With a hedge?
Yeah.
Bonds. That would be the best hedge for producers to hedge your interest rates if they are having an arm or wanting to lock something in, get short the bond market.
All right. Now let's take a look at crude oil. That's another market we've been trading pretty well in a set channel. Do you expect that to continue?
I do. I think more range bound. I would take a shot at selling some naked calls if October got back to 98 area. Fundamentals are extremely bearish. Supplies are pretty ample right now. Demand is steady, nothing spectacular yet for summer driving season. So yeah, I think rallies are going to be capped, and if OCT goes to 98, I'm going to sell some like 106 calls.
All right, and now as we look at the dollar, it's been on the move recently. We've been moving up. Do you see that continuing?
I don't. We've bounced at 4 points. I would sell the Labor Day contract up around 84. I think it's turning more into range-bound type deal there as well. But a lot of uncertainty in Europe still. I think they're close to another meltdown this fall maybe. So the currency market will remain wild, but I think here short term, the dollar moves between the 82, 84 range back and forth.
All right. Now, let's get to the heart of what's been driving the ag markets today, what's been the talk of all the traders. We had the quarterly stocks report and the annual acreage report from USDA, the survey. Break down to us, help us unpack a little bit what was said in the annual acreage survey and why was it such a shocker, particularly in corn?
Yeah, big movers there and in the new crop bean contract as well. But this survey done June 1, I think a lot of surveys obviously weren't completed in time or didn't get calculated in, but pretty much came in unchanged from March. And lots of carnage. Wild ride took off 23, 25 lower most of the session. Stocks number, which has been the wild card the last couple years, surprisingly, was a little bit bullish. And that supported the old crop beans especially. The July corn was supported off that too most of the day. But the acreage number was a surprise. Guesses are running from 2 to 3 million less, and it came in unchanged. And the big talk has been northern Iowa, southern Minnesota, Quad Cities area, how many acres are lost, and guys up in there saying, get out of the office, come drive around. And obviously, this number ain't right, but it was June 1.
Right. So we did see changes from June 1 to today, and those possibly weren't reflected.
Right, and they've already, going to do a survey, 14 states. It said the beans are ready. I think the corn will be resurveyed as well, but 14 states, as of right now, will be resurveyed with the beans.
All right, well, now let's take a look at the wheat market. We did see a sell-off this week, both in the wheat contracts, Talk to us a little bit about what we're seeing in wheat.
Surprisingly, we did see a decent export number, but we're getting a lot of hedge pressure from Kansas City over into Chicago. I like selling rallies. I think if you get the Christmas contract back to close to $7, you sell into it. We're still a tad bit too high on the rolled market, so I think we could correct a little bit lower yet, especially get spillover from corn and press on lower. But I'm a short-term bear yet. I think we're still a little ways away from attracting a whole lot of new fresh business on a steady account.
Is it going to take us to get through harvest and before we start seeing prices tick up?
Yeah, a little bit, but I think more demand as well to pop up. There's not any problems worldwide either with weather. Weather seems pretty decent pretty much everywhere right now. A little bit of heat out west, but nothing too much. Wheat is kind of trading in tandem with corn right now, so I think just new demand on the horizon would attract some short covering.
All right. Well, now let's crack into the corn here for a second. We're still seeing the September contract traded as new crop corn. Can you talk to us a little bit about what to expect with that as we look at the September contract?
Yeah, I was a little surprised that it pretty much traded right in tandem with the Christmas new crop contract today. I think we're going to have a late harvest and very, very tight supplies coming into obviously late August, early September. So I would think you'd see a lot of commercials, specs come in and try to spread that buy SEP, sell Dece. And I'll be looking at that too next week as a trade. But here today, just it got parlayed lower with the new crop contract. July hung in very, very tight basis levels. We're trading over $7 on the river, and I think that's here to stay. There's not much grain beans, or wasn't much grain being sold at $6.80, and now we're trading $6.60. So I think we need to get close to $7 with this front month July that's into delivery now to price and grain loose.
Basis is going to have to be carrying the weight as the board slides.
Yeah, that'll pull it up higher. You got July into delivery, like I said, and you got $7.20 cash and $6.60 and change futures. So I think the futures got some room to run yet.
Now, as we look to the futures, producers are out there watching this USDA report, watching the 23-25 slide in corn. Would the best advice be to wait and see if these numbers get revised, see if the market cools off and bounces back? Would this be a good time to look at buying in the Dece contract?
Not ready to buy yet, just because we had a really soft close today, not much action coming in late in the day and bottom picking or nothing like that. I'm not hedging, initiating new sells down here around 515. This is where we were back in May. And so we've kind of erased all of our losses or all of our gains from the last 2 months. I think you got to correct it back up close to 560, 570 yet, even just where we came from. give it some time. A lot of uncertainty yet, a lot of weather. Like you're saying, let's see if NASS can resurvey, these northern states and see what happens then. But yeah, I'm not initiating any new hedges at 5.14.
Right, wait and see, because we could have a weather scare yet this year. There could be a lot of things to boost
right.
new
If
crop
you're
corn.
short, let's stay short. Hold hedges. But I wouldn't be coming in Sunday night and hedging the farm off.
All right. Now, as we look at the demand situation for corn, how are things looking for ethanol plants in particular, as we mentioned earlier in the show, and feed needs? What are we seeing there on the demand side?
They're trying to buy as much as they can right now, because I think they know that we're probably going to see higher basis levels, firmer basis levels come August, late August. They're trying to purchase as much as possible now, and I don't blame them. Tight supply is obviously being the key, but I think it's here to stay, and I think some of them will probably scale back, shut down in August, but producers need to watch these prices. They're awfully, good sell prices if you have any corn laying around.
All right. Now let's take a look at soybeans. We did see a slide again this week in new crop beans. Old crop beans, as you mentioned earlier, strong support after today's report. Talk to us a little bit about what we're seeing there.
A lot of spread action, just like we've seen in corn. And I still like spreading beans August versus November. Supplies are tighter here than they are in corn. And if you can find a good entry point there, look to spread into it.
What sort of entry point should they be looking for?
Oh, I think you get a 20-cent correction. If you can get one, you buy into it from where we closed at today. But for the new crop contract for producers there, if you're short, stay short until we get back above $13. The acreage numbers here, pretty much the same as March too. And you get back 1290s, initiate some new sales, and just run and stop closes over 13. But down here where we're at right now, I'd wait for a balance to sell into. Same thing, lots of weather, NASS doing their resurveys. A lot of this is factored in right now with this increase of acres, and I think it'd take a big surprise from NASS to, shove it down to 12 or whatever. Trend is down here short term, but to just hold shorts and, and see what happens.
All right. Now, as we look at what the market is trading, the 77.7 million acre figure that USDA came out with today, how did that compare to market expectations?
There's lots of analysts ranges running from 700 to over 1 million increase, but I thought that was a tad bit too high, because I think some of the corn that everybody thought was lost went straight to beans, and it was too wet and went to prevent plant. But then they were expecting kind of a bearish number there. The market did react bearishly, but it was more off the anticipation that we're going to see 1 million increase.
Okay. All right. So just keep an eye on the new crop. What levels again were you looking at
I like selling 1290s and running a stop close over 13. Hold shorts now until we get close back above 13 as well. One last thing here on the new crop beans, same way as new crop corn, be looking at the reg contracts, the November 14s, 1290 as well, and the D's 14 up around 585, 590 area. Short term, those are a short play as well for hedgers.
All right. Now, let's take a quick look at cotton. We saw a big sell-off last week. That sell-off continued this week, down 63 cents. What are we seeing in the cotton market? What's driving that?
Very soft market, firmer dollar. China's slowing down as well, too. Their economy not near as strong, so they're not buying as much cotton. I like selling December up around 87 to get a bounce up into there. Plus, there's no threatening weather down south. There's a forecast for some rain across Texas this weekend, and just really no major heat. The heat dome, heat ridge, parked clear out west, and just no major threatening concern yet. And plus, China's economy soft.
Okay. Now let's take a look at livestock. As we look at the live cattle number, we've heard reports of Russia buying a lot of live cattle out of the west and the northwest. We did see the market continue to improve this week on live cattle. Is that a trend you expect to continue?
I don't. I think it was a short-term type deal. It was an impressive, 4-cent bounce. But if you look at the volume, we look good till noon pretty much every day this week, and the market fizzled out going into the close. And it was more short covering. It wasn't guys getting long, funds getting long. It was kind of just get me out type trade. Cash came in a light trade again here this afternoon at 120, pretty much steady from last week. So I like selling October up around $1.27 area. If we can get back up into there, I would get short. But it was a nice balance, but it was short covering. It wasn't new money coming in off any new demand news or nothing like that.
All right. Now, as we look at the feeder cattle market, talk to us a little bit about what we're seeing now in feeder cattle. We've seen another solid run-up in feeder prices.
Yeah, lower corn trade, higher feeders, 5-cent rally here lately that we have seen. I think it's going to depend on corn next week. I got a short trading week coming up, so watch the corn. But I think the corn would stall out, go sideways. 157 would be a good sell for November. Look just for a 2 to 3 cent correction. But here, short term next week's going to depend on what corn does Sunday night, Monday, if we're going to test $5 or not there.
Okay, and that's the $5 number is what producers should be watching, therefore, in corn.
Yeah, if we can hold together these lows from May or not, I think it'd be the key next week. Hold 515 area, and I think the cattle would stall out, and you'd see some profit taking there.
Now, how do things look on the demand side as we look at live cattle and therefore feeders? What are we seeing on demand for cattle? Is that starting to pick up at all with this warmer weather, have you heard?
It has a little bit, and I think will increase even better. But then you have the supply situation coming this fall with a little tighter numbers as well. I'm just a little bit negative here in the front end, and you get out into deep winter, I think they remain a little more supportive. But exports were decent, really decent this week for both pork and in beef.
Okay.
So they are keeping up there worldwide.
All right. Well, that's good news. It's sort of a break we've been looking for in the cattle market, producers have. Now let's take a look at hogs. The hog market, again, still sticking around $100. We've had a nice little run up there. What are your thoughts in hogs?
Toppy. They did have a late sell-off today, but it was mostly end of the quarter, end of the month type deal. But I think a trader needs to be looking at getting short soon up in these hogs. We had a nice rally based off discount, futures being a discount to the index. That brought new spec money in and pushed the market higher. I don't see the cash market really surging much more and pulling the futures up, so I'm looking to sell rallies here short term.
Sell rallies as we approach, what sort of levels would you be selling?
I like 88.5 for October, even sell calls, some 92s or 94s out into there. But we've seen a surge in the product, and that's what's really been the key. July is in within 1.5 points of the index, so I think that's enough and see some profit taking.
Things to keep an eye out for. Thank you so much, Jamie. That wraps up this edition of Market to Market. But if you'd like more information from Jamie on where these markets just may be headed, visit the Market Plus page at our website. You'll find expanded market analysis, audio podcasts, and streaming video of our program, as well as links to our Twitter feed and Facebook account, all free at the Market to Market website. Be sure to join us again next week when we'll examine the outlook for agricultural trade. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by DuPont Pioneer, working with growers to match the right product to the right acre. Science with service, delivering success.